To talk more about the implications of higher crude oil prices, we are joined by Vandana Hari, founder and CEO of Vanda Insights. Hi Vandana, welcome to the show. The first and the biggest concerns remains on the crude oil prices. Now currently we are looking at the levels of $80 a barrel, but if there is a possibility of the closure of Strait of Hormuz, this could push the oil prices even further. In fact, analysts are expecting around $100 a barrel. I want to understand from you, where do you see this oil prices heading towards?
Good morning, Anushi. I'm glad you started with the point on the Strait of Hormuz because there's a range of worst case risk scenarios that could cause major disruption of supplies from the Middle East. But the market attention focus tends to center quite a bit on the Strait of Hormuz. And especially as you were mentioning earlier, over the weekend, Iranian parliamentarians approved the closure or the blockade of the Strait of Hormuz. But so let me just put this out at the start very, very clearly. I do not see a material increase in the probability of Iran actually trying to disrupt traffic through the Strait of Hormuz. So this is a view that I have been maintaining through last week as Iran and Israel were trading attacks. Mind you, those attacks have been very targeted. Thankfully, there have been no accidental firing that could have landed in any other countries. They've been basically just been targeting each other. Iran has very little to gain, if anything, and a lot to lose by even attempting to blockade this vital artery for the oil markets. It risks making enemies out of its all its neighboring countries, who, mind you, who have been so far been very neutral in this, even some of them even sympathetic, and who have spoken out against Israeli and US strikes against Iran. So Iran doesn't want to make enemies out of them by blockading their flows out into the markets. Iran also can't risk the ire of China, its main market for crude flows, and the other markets in Asia, which are currently not buying from Iran, but are potential customers of Iranian crude. So I see the risk of that as very minimal, and I certainly don't see necessarily any elevation in that risk as a result of the weekend's strikes.
Just on that note, if you can also provide us with the levels that you expect for these crude oil prices that are there, since you are considering minimal sort of a risk, and the biggest implication that we are looking at is how this would affect India. Now, if we are looking at the numbers also, 38% of oil imports and 52% of LNG imports in 2024 came through Strait of Hormuz. So what would be the impact on India also that we are seeing? So two-part question on this front.
Yeah, so we have seen crude prices based on a daily settlement, Anushi. Brent settled just over $78, which was a 5-month high last week. Let's see if it actually climbs higher today. We saw Brent go above $79 in the initial minutes of trading this morning, but it has pulled back considerably since then. That tells you that while the knee-jerk reaction of the market might have been a little bit too much nervousness, it seems to be settling down a little bit into perhaps a more cool-headed assessment that of the worst case risk scenarios. Now, yes, it is even if prices do not climb further from here, it is a major concern, certainly for consumer nations, import-dependent countries in Asia, including India. But I think let's keep our minds open. There's a lot of rhetoric and posturing that will be happening in the coming hours and weeks. And to my mind, Anushi, it is a bit of a relief that the market is not hitting the panic button. It's not reacting in the extreme to the worst case risk scenarios. So but even if prices sort of average about in the high 70s, it still means a good $15-16 premium that consumer nations will have to pay compared with where prices might have been, keeping in mind that we were looking at a year of plentiful supplies in the oil markets, and and sluggish demand growth because of a economic slowdown, deceleration, thanks in large part to the tariff wars unleashed by the US.
Okay, so just to re-emphasize on that front, now Iran has said that it will close Strait of Hormuz. So just I want to understand in what ways it can close exactly and what could be the likely impact, and will this lead to a problem in terms of where sourcing is concerned for India, or would there be alternative sources of oil supply for India if we move forward to other countries like say Russia, for example?
Yeah, so the second part of your question first, as you were just playing Minister Puri's clip there, India has a fairly diversified portfolio in terms of oil. It gets a lot of oil, has been getting much more oil than pre-Ukraine war from Russia. The Russian oil does not come through the Persian Gulf and the Strait of Hormuz, so it's relatively free. It comes through the Red Sea. Of course, there's been a bit of fear there over the Yemen's Houthi rebel strikes, but by and large, those flows have not been impacted. Going back to the question of the Strait of Hormuz closure, I would reiterate and stress, Anushi, that I do not see this Iran actually going forward. So again, I think we should be very clear that Iran's parliamentarians have said Iran can go ahead. That is just one step. They have not. They are not in a position to dictate, or they are not the final word on this. The final word has to come from the Supreme National Security Council, and has to be further ratified by the Supreme Leader Ayatollah Khamenei. And I do believe that for all the reasons I outlined earlier, that Iran will not, in my view at least, not risk this kind of a reckless step. It has just too much to lose by even trying to do it.
Okay, thank you so much, Vandana, for joining and sharing those insights on what this could mean for the oil market. Once again, thank you so much for joining.